Hello, it's Wednesday, our usual financial show. My name is Sasha Star. It's IBM TV, now Pod TV. And now I would like to introduce our panel. It's Nick Poliveda, founder of the network. Hello, Nick. Welcome to the show.
Hello, Mr. Sasha. How are you doing?
And our regular private investor, Peter Bennett. Hello, Peter. How are you?
Hey, Sasha. Hey, Nick.
Great to see you. So our first segment, we'll talk about high-paying dividend stocks, which is the core of our portfolios. And I think all people should consider that. And well, now with all the turbulences on the markets that we had in the last few days, they're pretty well holding their own, at least my dividend stocks. I have plenty of them, including Altria and British American Tobacco, Enbridge, and see, they're not companies that you would consider, for example, in impact investing. You wouldn't consider these companies at all. But they're still paying dividends, doing okay. Pfizer is one of those. GDV, it's Gabelli Income and Dividend Fund. What about you, Peter? What's your status with these companies?
Well, I'm getting very defensive, first of all, and that's why dividend stocks, are the best. They've been holding up pretty well, very well, down a little, but that's typical, in such a down market. But I tightened up things a little bit, and I'll tell you what I did. First of all, I sold BSR Real Estate, which it was only a 3% position, but it went up 15.5% in a month. And I started looking at it in short term. I think the market's there's a lot of danger of going down. I'm going to explain in a minute. And in the long run, I'm thinking now it's only a 3% dividend. And I'm not even sure how the economy is going to be doing in the long run, because I think more and more I'm seeing which I've been saying all along, but I see it even clearer now that I think we're going to have massive deflation in the long run. And so this was an interesting, so my first point is the market's got it wrong, I think, totally, or the market's got it right for the wrong reasons. Let me explain. This is a chart which I pulled up, and it shows the different PEs of companies at different interest rates. So if at 0 to 2 to 4%, you get a PE of 18 times, basically, price to earnings ratio. But if you get to 6 to 8% inflation, the average PE goes to about 10. So people are afraid that we're going to get massive inflation, and that scares the market, and all the market could go down in maybe half or 60% of its value. I think the reasoning is right, and I think the market's going to go down, but for different reasons. First of all, I think a lot of stocks are just overvalued now. It's harder and harder to find value, but also the XLF, I heard this, that the XLF is the financial companies. They were down 6% in the last month. And the XLF tends to lead a lot of times falls in the S&P. And that they were one of the leaders in dropping, basically insurance companies and banks. And so everybody's afraid, basically, of, quote, inflation. And they say the Fed they're so scared the Fed will raise to 0.125 in 2022. It's like, oh my gosh, an eighth of a point. But they're not looking beyond that at the long run, where you have these huge factors of technology being deflationary, the office market collapsing, which is deflationary, demographics, which are deflationary, and Biden's tax policies, if they go through, are probably going to hurt the economy and be deflationary too. So I'm not worried about inflation. I'm worried about deflation.
Mhm. Well, interesting outlook, and of course, that's something to think about long term as well as short term. We always have to think short term because why would you bother with the long term if you're losing substantial percentage
Yeah.
of your portfolio in the short term? It hurts. Nick, how is your positions are doing in
Well,
stocks?
of course, Sasha, you got to define what a dividend stock is, because some of them pay dividends, but very little. I mean, is Apple really a dividend stock, or Microsoft? I'm not sure if you can classify that. MPLX, I would classify as a
Yeah.
dividend stock. I don't expect much growth in MPLX, and I thank Peter for that. I guess I owe him a dinner also for MPLX, because not only does it pay a good dividend, I'm already up 12.5% on the stock in addition to the dividend. I mean, that's like incredible. U.S. Compression Partnership up 7.2% plus the dividend, which I think is a nice 8% dividend. And so, and then of course Altera Group, which is the anti, what do I call it? Swiss Impact would have a fit with that
Right.
one.
Anti-impact.
The anti-impact, but it's up 17.14% plus the dividend. So the thing is, when Peter says that the dividend stocks have performed well, I don't have anything except to agreement. The only one that I've gotten slapped with is when I bought at Turno Midstream Corp, and that was a recent acquisition, and I'm down 1.91 on that one. But still, still here's my problem. When you're down 1.9, Sasha,
Yeah.
I don't really care, because when the dividend is 3, 4, 5%, you're still in the
8% on Antero.
See, 8%. Okay, Peter, here's the thing. When I'm managing pensions, it's really hard. We have a hard time explaining to clients that your guarantee rates are like 1% today. And they're all expecting, hey, I'm going to get double digits on these annuity contracts. The annuity contracts are all-time low, 1%. And you're lucky to get one. I mean, it's really bad on a guaranteed long-term basis. So anything above 1 is better than we can do in our pension fund on a guaranteed basis. Now, the assumed basis could be higher, 3 to 4, but nothing like 8%. Are you kidding me? There's no annuity company in America that legitimately pays 8%. They'll play games and say they give you a bonus the first year, and they give you a 30-year surrender charge. I mean, things like that. But none that are legitimate out there, Sasha. I know we work on that. Like I say, we advise on over $500 million worth of this stuff. And we have two companies that have 70 billion and 130 billion that we work with on a daily basis, and you're just not getting those returns.
I think that's the new normal. You know what?
Let me tell you.
I think this is the new normal for the rest of our lives.
Okay, Peter, if this is the new normal, the financial services business is in trouble, especially the insurance industry.
That's why I'm not in any financial services.
I'm not in financials either, okay? Because if this is the new normal, I'm staying away from all the financial services industry, because here's the problem. You make money off spreads and you have no spreads, okay? So how do you make any money if you can't spread? The only way the real estate people, the companies that lend money, they make it off fees. But right now with the real estate market so high, they're having a hard time even doing that, and they have no spreads on the other side. So I've been staying away from financials. You're absolutely correct. I think
which again, we're down the most of any sector in the last month.
It's got to be. It's got to be.
It'll get worse.
Well, I'm in it. I'm in it to lose it, because we go over this every week at our office, and they go, it's a race to the bottom. Now, here's where the financials do make money. You wouldn't believe it, okay? But here's where they actually do make money. Investment managers, asset managers, they always make money, because what they do is you give them money and they take a percentage of the assets under management. As one company says, we do good when you do good. And they have a commercial running, and the guys
Future Investments.
Yeah, I wasn't going to say the name, because who knows, they may advertise on it, so I didn't want to say it. But here's the deal: what they never tell you is we do good when you do bad also.
Yes,
Okay?
exactly. That's true.
Because they get a percentage of your assets every year, every quarter, every month. So if you give them $1 million, they get at least 1%. So they're making 10,000 a year. If your account goes down to 900,000, they won't make 10,000, but they'll make 9,000 while you just lost 100,000. So they
Yeah,
do
there's
good when
one
you
thing
do
about
bad.
that, though, that's
Right.
worth pointing out. And by the way, I have a very small position, minuscule now in Morgan Stanley. I took a lot of profits on that over the last year, year or so. It's been up a ton. But even technology is also going to attack even these companies, because more and more people are going to ETFs or lower management fees. Investors for years now are becoming more and more aware that it's not worth it to pay a big hedge fund a large percentage, or where I might lose a lot or gain a lot, but sometimes they do great. But so that's going to hurt even these companies. But if we're heading for the place I see, which is very extremely low rates. Again, to sum it up, and I have a few pieces of news about this, about these black swans that are coming. But one is government debt. Everybody knows it, but people aren't realizing the governments are not going to want to pay any interest on these huge debts. 27 trillion on the books, maybe 200 trillion off the books for the United States. Free healthcare around the world for over 65. They're going to be printing money. They're not going to want to pay the debt. 2, technology. Let me read you this article. It's fascinating. Keep in mind, in the United States alone, 9% of people make their money earning by driving. And around the world, that's a big industry. I haven't looked at other countries, but there's drivers all over the world. It's a low-skill job. So it says, this was from Barron's last Sunday, autonomous driving is closer to reality than ever before. In Las Vegas, Lyft or I'll just sum up, Lyft was approved for what's called level 4 driving. And what that means is they don't need a safety driver anymore. They did 1,000 runs with safety drivers, or 1,000 tests. And now they've moved to level 4. So now they are actually going to be running cabs in Las Vegas without drivers. Mm-hmm. And Waymo has done this in Arizona. They're actually now driving. They have cabs running around without drivers. And GM is testing it in San Francisco, but they haven't gotten to level 4 yet. So when these companies finish, and by the way, Lyft has plans for 2,300 locations now. They're going to be doing it and to roll it out nationally in the next 2 years. So when all these, this is just one example of technology where it's going to vaporize jobs. And there's a great book called Vaporized, by the way, which is all about how technology vaporizes jobs. So when you take the national debt, the vaporization of jobs, and last week I'll mention we saw the nurse Grace who does medical care, and a manicure machine came out that I saw. And then you add that to the fact that technology spreads better price information, and the demographics of an aging population, it's probably going to be zero forever. And it's probably U.S. rates will probably hit zero maybe in 6 or 8 years. And that'll be it, because there won't be a way to stimulate the economy anymore, because you can't go below zero.
Great information, Peter. Before we will go into our commercial, as we usually do after first segment, I would like to mention what means a dividend-paying stock. For me, it's a 5% or over, and I only make one exception. It's Pfizer, because it has many other characteristics which I like a lot. So I don't know, you want to make Pfizer a dividend stock or not? 4%, less than my 5 or over, but to me it still is. Okay, let's do the commercial and we will go into the second part of our program.
and Guidry goes, let's go look at something that took place 40 years ago. Who cares? Okay, that's political.
Okay, very good commercial. Of course, now we would like to move into second sector of our program. We'll discuss gold, silver, and well, sorry to say, Bitcoin and some other wonderful cryptocurrencies. So on gold, it's quite an eventful market right now. It dropped substantially. Gold stocks I'm talking about last week. I think it's staging a little comeback, nothing to write home about, but still. And as I said, for example, Barry Gold, which I own, pays about 2% dividend, and they have some other goods on the table, some special dividends and so on. So I don't want to miss on those, so I'm still in there. Although I'm very protective, and I was selling all of the time the covered calls, and I've done quite well with this, which is offsetting certain losses. Although I'm still in the plus column on Barry Gold, and but I must admit I made much more money on options on covered calls than on stock itself. Okay, now, Peter, about Bitcoin, I'll let you to speak because
Sure. Yeah, my favorite. First, I just want to say on dividend stocks, for many years, I only wanted 4 or 5% minimum, and it was easy to get in what I considered safe companies. But now I'm willing to go to 2%, 2.5% if I see growth and safety, because I get 0.4% at my American Express cash account, and I even bought treasuries, which are up for now. Who knows what it'll be, but long-term treasuries at 2.2, just with 3% of my portfolio, because rates are so low. And so if I can get 2.5% with a nice growth pattern, and I still have lots at 5%, and I'm going to talk about one which I grew later where I bought more of it, and interesting story. But in terms of Bitcoin, I keep reading more and more. I do not know. I've always said it could be $0 or $1 million. It's totally speculative, but I've been saying more and more, it's probably going to 0. And so every time I'm seeing more and more news, I go, it's probably going to 0. So China this week, first of all, said that they want their financial organizations to basically it's banned in their financial organizations. And they've already banned cryptocurrency mining in the country, and they've been doing 75% of the mining. It's very incredibly energy efficient. Bitcoin alone uses 0.6% of the energy in the world, and China has a huge pollution problem, and they don't want to use extra energy because you can't breathe in Peking, and so that's why they're banning it. They don't want to use extra energy. So that alone tells you that it's terrible. And then, but here's a few other things I read. I read 85% of federal banks around the world are considering digital currency or researching doing digital currency. We know the United States is. And also I have one last thing, a quote which sums it up. They said, this came from Barron's again, one of my favorite publications. It said, if crypto and central bank digital currencies become main stock in international trade, the US dollar will be in clear and present danger. So, of course, no government wants this to exist because it's printing money. It's terrible for the US dollar. I know it's worth about, I don't know today, 30, but I've been saying sell it at 56,000. And you still, well, I don't know, you could research it. There's got to be a way to get rid of it.
Yeah, that's my big problem, and my basis on this is like next to 0.
I know
because we were actually, I got this because we were filming in Las Vegas at the Money Show, and we interviewed John Scully, who was the CEO of Apple, and Bobby Lee, who was the cryptocurrency king back then in 2016. He said, "Here, I'm going to give you one of these. Hold on to it. It's going to be worth something someday." Okay, and I held on to it. And it's worth something someday, but still, the real
Maybe.
problem.
Someday it may not be worth something.
I tried to sell it when it was like worth 5,000 or 6,000, but finding the buyer was a real problem. In other words, you can't go to a legitimate bank, and say, "Hey, look, I'd like to cash in my."
You can sell it by appointment only.
Yeah, you sell it by appointment only. I mean, it's like a weird thing to have. And I know people believe in it, but they believe in Tesla at 1,000 times price earnings. But Tesla, I think, is actually better than Bitcoin. I'm not into that the mystery of mining a something behind my back, and now all of a sudden it's worth a lot. If anybody can do it, then we should create our own IBM TV coin, okay? And just tell people, hey, look, it's worth $10,000, and then next week we tell them it's worth $20,000.
But there is a big difference, because with Bitcoins you can buy Tesla car, and with IBM currency,
not anymore.
Really, they decide to give up that one?
No, Sasha, that Musk said he won't take Bitcoin anymore.
No, I think
because he finally figured out that it's energy efficient months after endorsing it. I could not believe he may be a genius in some ways, but that was one of the most foolish things to do.
Like I said, I don't really get it. But if I could trade that in for a Tesla car, give me a call. I'll take the Tesla. You can have that stupid coin.
If you research it enough or talk to Joe Duncan or somebody will tell you how to sell it.
There's got to. Yeah, but see, when you have a currency that's so difficult to transport, and you have governments that are beating it up, you have to look at yourself. What are you doing here? And I mean,
I agree. Now, in July, the federal government's coming out with a report on it, and there were rumors back in April that they might put an 80% capital gains tax on Bitcoin.
Well, that's the other thing.
The government's going to, if I was the government, I'm just saying what I would do. I would be finishing that thing off pretty quickly.
I got a big capital gains tax on that if I dumped it, because I have no basis in it.
Let's be practical about something. There are a lot of companies and individuals who actually own Bitcoins. So with the government regulations, what do you expect companies and people to do about it?
Well, I
go bankrupt. No, I'm kidding. I'm joking. I don't know. They'll just do whatever they do. They'll sell it. They'll take losses, or they'll make gains. But it's so speculative. But the odds are against it. It's not the kind of thing. I mean, at least gold and silver. But also
when you're analyzing a company, because I do have, where's this guy, Benjamin, whatever his name is, who's that great book?
Benjamin Graham.
Yeah, Benjamin Graham, where he's around here somewhere. Okay, the thing is, when he's talking about value investing, okay, and using your intellect to purchase good companies over the long term, Bitcoin doesn't do anything. It doesn't do anything for me, Sasha.
No, it has no fundamentals at all.
It has no fundamentals at all.
Have you tried to look into some things like Ethereum and Dogecoin and Dogecoin? I don't know what's
okay, you see all those books there, Sasha?
Yeah.
Okay, none of them are fiction. I do not read fiction, and I don't read books about Bitcoin because it's fiction. Okay, I read about real things. Okay, I got the Wall Street Journal. Apple, I bought Apple because it's a real company. They made a great deal here in North Carolina. I don't know if you know what they did. And big companies do this all the time. They say, hey, we're going to invest. We're going to bring $3 billion to North Carolina. Well, that's not really what happened. North Carolina, this state, gave Apple $874 million in job grants. $874 million in job grants. Can you imagine a company? In other words, hey, look, Sasha, give me $800 million. We'll move IBM TV to Canada. I mean, come on. And what's it used for? To pay salaries for people on an Apple computer. Okay, so I bought Apple when it was down. Now it's way up, and I'm real happy with it. But all you have to do is know those companies are doing things to make money, and they're going to produce real products, which is their stupid iPhone, and they'll create something else that people are going to pick up. Bitcoin ain't producing jack. They're not doing anything. It's a complete waste. It's a fiction.
I think gold and silver, to transit to gold and silver, gold doesn't create anything either, but it acts as a better insurance, because at least you know there's going to have some value.
Yeah. Gold does have value because they use it in weddings in India.
Well, because there's a limited amount. All the gold in the planet was deposited by meteors.
Gold is actually a metal. I have Ken Ross gold. It's down 1.4. To me, it's not a big deal because it's a hedge against
That's a
inflation.
good company, by the way.
Yeah, Ken Ross is a good company, and I'm going to hold on to it. Matter of fact, when I saw it down, I'm inclined to actually buy more because if Uncle Joe passes this $6 trillion, we're going to spend more money than we have. Gold's going to be worth more because it's a metal that is going to
it'll
ride
hold value. It'll hold value.
It'll hold value.
Even if there's
Right.
deflation, it'll hold value, which is everybody talks about it as an inflationary trade, but really it's a deflationary trade too, because if interest rates go to zero, any inflation over the interest rates will create gold. So that's why I hold 4%, but I just like GLD. It's just, because I don't worry about how the companies are doing.
I was on one party a few days ago, and there was a discussion about the comparison of value between Bitcoin and gold. And what they were saying is that the gold that always could be a new deposit found or so on. But with the Bitcoin, it's known fact that only 21 million Bitcoins will be done, no more. So,
no, but there'll be Ethereum and Dogecoin and
that's exactly what Peter's saying.
And digital currencies created by governments.
You're right. They are so full of it over there. Those people that are Bitcoin people are tantamount to fraud because what Peter just said. Oh, I've got a Bitcoin I'm mining and I'm only produced 21 million. Then John opens up John's Bitcoin and says, well, I've got a Bitcoin. I won't produce 1 million. And then everybody goes, oh, it's worth a lot more money. Come on. What sort of sickness is this? Okay. Some people buy into that fantasy, Sasha. Okay. All right. They don't read this book, The Intelligent Investor, because you got to strike the top part.
They're busy. They're busy people.
I mean, the intelligent investor ain't going to go there. I know none of my clients would go there. I mean, they ain't going to happen, but they're all smart. And I was telling who was that guy? Your friend Shaquille. I was saying they don't do bad. They make about $1.5 million a year income. What's wrong with that? Call me all the time. And the thing is, and he was poo-pooing $1.5 million a year. I said, look, if you make $1.5 million a year, you're doing pretty well in the United States of America. I'm sorry. Okay. Yeah. And the thing is, they don't rush into things like Bitcoin. I 37 years that somebody
why would anybody, except for pure speculation. Again,
speculation, right?
Go to Vegas and bet on red or black. The odds are almost even.
Well, we see the same phenomenon with AMC, Tesla,
the meme
GameStop.
Stock.
I mean, all the Robin Hood things that are going on out there. And the funny thing, Peter, if you're in this industry long enough, okay, you see this happens. And you know what's going to happen next? I don't know if you guys know this. There are going to be seminars around the country with experts showing how you can make $1 million a year in Bitcoin, or you can make $1 million a year betting on Tesla stock. I'm serious. I used to hang with that crowd. And you know what happens? They go out, they do these seminars for a while. Then the market collapses, they collapse, and it's over with. I mean, the only question is...
What's happening with those seminars? They're energizing each other.
By the way, I have one over here. Let me show this guy. Okay? You guys probably aren't familiar with it. Some of you might be. I'll pull it. Here it is. The Wall Street Money Machine. You ever hear of the guy's name is Wayne Cook? If you haven't heard of him, okay? He did a lot of seminars around the country. He made millions. You know where he is today?
Jail.
He's in jail. Yeah, like all of them. Okay, how'd you know?
What was he promoting though?
Good guess. Okay, here he is, Wade Cook, in jail. Okay.
So what were the seminars about?
The seminars is how Wall Street's just one big money machine, and that if you invest, and he'll show you how to invest and make millions of dollars.
Probably penny stocks, I'm guessing. Right?
I don't know what he's.
I think that's my guess. I have no idea. But
the thing is,
Warren Buffett has a saying. He says one of his many rules is don't lose money.
You're right. Right. Well.
And it's like, okay, but if you buy that, you're going to lose money. Even gold makes me nervous. Really, it's
Peter. This guy was doing seminars, making millions and millions of dollars for years while the market was hot, because people would all flock to these financial gurus. He was one of them at that time.
Yeah,
and then the market collapsed, and guess what happened?
Yeah, it sounds like he was a scam artist. I don't know. Again, I don't know, but it reminds me of these stories about penny boiler rooms, penny stocks, pump and dump. But again, it's all. I'd just as soon do a penny stock as a Bitcoin too. Although, look, Bitcoin could go to $1 million. I'm not saying where it's going. I just think the odds are against it because the governments are against it. Governments must hate it, and there's no moats, and everything it seems negative. And even with gold, I'm nervous because I'm almost sure of deflation now. Through this show for months, I've been talking about it, but it's a 40-year trend for deflation, and I don't think it's going to change. I think we're heading for zero rates, and then they won't be able to stimulate the economy. So it's so important to lock in dividend stocks and to make the money in the next maybe 5 or 6 years.
Or if you want a certain amount in gold, one of the first funds I ever bought into was actually a T. Rowe Price's. They had actually a precious metals fund. And of course, it did like most precious metal funds, went nowhere. And then eventually I dumped it. So I'm like everybody, I have a little bit in gold. It's kind of a fun thing to be into because I do know they use it in Indian weddings. People do consume gold. But in terms of, am I looking for super huge innovation and appreciation off of gold? No.
It could be. Listen, Nick, if there is massive inflation, which I'm 90% sure there won't be, then gold could.
I agree.
It's an insurance.
The minute Joe Biden signs $6 trillion and dumps it in, then I got to turn around and go put a lot more.
No, I think that's deflationary. Again, that's my number one theory. When the government prints all this debt, in the end, it winds up that they don't want interest rates to go higher because they don't want to pay money on the debt. As I said before in another show, if interest rates went up 3%, the national debt already on just what we're declaring the United States, 27 trillion, would be more than the defense budget, or as much as the defense budget. But there's huge unfunded liabilities all around the world. So interest rates cannot go up.
But tell me what new product is gold going to come out with that's going to excite everybody and drive demand?
No, just gold and
more gold. And more gold, and even more gold.
Gold.
With that, let us move to the next segment. And in the meantime, let's have a commercial before that.
Okay.
Welcome to Swiss Impact with Banerjees. I'm Svetlana.
And I'm Ben.
In Season 2, we will be traveling around the globe, out of Switzerland, and bring amazing leaders from businesses, thought leaders, political leaders, of course, investors and experts.
We're working at implementing and realizing all the United Nations Sustainable Development Goals, better known as SDGs.
And they're also making profit.
Hello, I am Amina Gurib Fakim, and I'm the 6th President of the Republic of Mauritius.
My name is Parvati, and I'm a musical artist and the founder and CEO of Parvati Foundation.
I'm Michael Lichtenstein. I'm an entrepreneur here in Liechtenstein. I'm running on one side a financial services company.
Hundreds of deals a month. We are seeing more things happening in this impact world. And this is because, look, the world is changing.
So join us to discover impact investing ecosystem.
See you every Friday afternoon at 3 p.m. Central European Time at Swiss Impact with Banerjees.
See you on Friday. Act with impact.
Wonderful.
They didn't really highlight Kevin Harrington as well as they could. He was actually the original shark on Shark Tank. Okay, there's an interesting story. So he was one of the sharks on Shark Tank, and then Mark Burnett, who was the producer, kind of brought in another guy called Mark Cuban. Okay, and then they needed to let somebody go. And since Harrington wasn't investing a lot, he was kicked out, and Mark Cuban took his place, and it's been that way ever since. So you know what Kevin's been doing all around the country. He does seminars. Hey, come see me. I'm the original shark on Shark Tank. He's made a whole big business out of being the original shark on Shark Tank. Yet you're not going to see him on Shark Tank unless you look at season 1. So he's got a very, very interesting history. By the way, he's a much more dynamic speaker because I've seen him speak live than he is on television. Although he was on Ben's show, but a pretty interesting guy, interesting story. So,
well, with that, we are going to move into a world of options and how it can really help our portfolios. I'm using options a lot. And for example, I just described on a previous segment about the strategy what I'm using for buried gold. And basically what I'm doing is, let's see, when gold was, I acquired buried gold, my intrinsic cost is about slightly over $18. And what I'm doing is for when gold ran to $24 recently, about 2-3 weeks ago, no more, probably a month ago, I sold January 25 calls. And of course, I got pretty good premium on that. And when gold started slowly to move down in recent weeks, when it reached $22, I liquidated this position with a good profit on 25 because obviously they went down in price. So I bought them back and I sold now July 23rd calls, which most likely they will expire worthless, and I will be able to sell following probably September, maybe November even calls. So I'm always augmenting my profit with selling of these calls, and as long as shares of Barrick Gold will not collapse into $15 area or maybe even lower, I think probably they will hold on to at least $15 a share or higher, simply because they're paying a lot of cash this year with their 2% dividends, and they have some special dividend. And so I think it will stay there because cash investors, dividend investors will take notice of that. And then we'll see. We'll see. It can move. Actually, you're right, Peter. It could move lower. There is a potential for that. It could move somewhat higher as well. We've seen it many times before. So we'll see. It's right now.
If you're selling options, you just have that steady income anyway. So as long as it stays there, basically, it's a source of income, right?
It's right. Of course, I could decrease my position in gold, and I can sell any other options. So, for example, I sold a few days ago options 83 calls on AMG, and doing quite well with that because stock is still around 83 some level. But the premium, I sold, I think, July 16th. 83 calls, and the premiums is coming down. So I can see several scenarios where they will expire worthless, and I will probably be selling September calls and so on. Now, of course, my core options positions are NVIDIA and Zoom.
Oh, yeah.
You know those. But you see, I do adjustments from time to time, maybe because it's boring just to see and wait for expiration. Although I have nothing against that strategy either. But I'm doing some adjustments. For example, on NVIDIA, I made a lot of money on 600 puts. Okay, so what you do, so I decided that, I closed that position and opened a couple of days ago 850 puts.
Yeah.
So now on NVIDIA, it's very interesting. I have sold both calls and puts for a total premium. You won't believe, where is my NVIDIA? $157 on each call that I sold, 620 June 22, and I got $182.20 on each 860 June 17th put. So in premium alone, I got $340. So you see there huge protection I have. I'm not saying that there are no scenarios where I may lose money. Probably yes, there are scenarios, but it's provide huge level of protection plus possibility to adjust certain positions. For example, if NVIDIA will continue to run higher, I will start making a big profit on a put position, and I will roll it into even higher put position, get even more premium. Now, on the other hand, if it will start going lower, then I will probably close my call position and sell another call to it. So I'll make a rollover, and I will adjust. That's
I did NVIDIA too, thanks to you. But I've so much experience with these growth companies where I sell a high put and then it goes through too fast, and it's probably going to happen to NVIDIA again. But I was at 600, and I said, you know what? I think NVIDIA, especially when they announced the 4-for-1 split, I said, I'm going to do 800. So that was a really good move because I made money on the 600s, but I beat the big increase to 800. Now it's 750 around there, and I have 23 puts that I sold, and I covered with 400s just in case. But so I did very well with that. I've already made like 33%, return on that.
So basically, your
My
initiative.
concern is that it's going to go through too fast. But I'm watching it. But I'm also watching the ARM deal because they're merging with ARM, and I just want to make sure that that goes through because it's being challenged in Europe and stuff. And I think the company will be much stronger with ARM. But I think either way, video chips are the way of the future, and they're a leader. And so I really like NVIDIA. Also, I adjusted Delta this week because I'm so afraid now. I'm not sure, but I do not like the market. All the stocks almost all seem too high. I think there's going to be big trouble down the road with, all the different mega issues. Plus, if there's a Biden, something goes through on the tax increases, the market's not going to like that at all. So what I did is I moved some of my Delta. I love Delta, by the way. And by the way, in the last week, they said they want to hire 8% more pilots within a year. And American Airlines, by the way, had to cut back on their flights because they don't have enough pilots and staff right now. But that'll probably change in September when they actually stop paying people to sit at home. But so what I did is I moved my positions where I have some September 60 puts I sold, but I also went with 2023 75 puts, and I just made all my protection 30 and 2023. Because even though I love Delta, it's been in a small range and it's flat for the last month or two or three. It doesn't seem to want to recognize the true fundamentals of what its really potential, because I think it's one of the best travel stocks without a doubt. The cruise lines know, a lot of the airlines have a lot of debt. Delta's going to be profitable this year. So this way, I'm protected till 2023 on those 30 puts just in case, and it wasn't that much more expensive to buy those, and I'm not going to get wiped out by time on the September protection. But meanwhile, if it goes up to 60 by September or 55, which I wouldn't be surprised, 54, 55, then I can just roll that into a higher bet. And if it doesn't, I can just roll it and maybe do the 75 calls for 23 and just wait it out, because sooner or later Delta looks like a very solid company to me.
Yes, well, to conclude this section and go to the next one, let me remind you that from 1973 to 2021, sellers beat buyers in options all years, every single year except 1987, the year of the crash. So if you are selling options, I think this is a prudent way. It's a prudent strategy, whether you're selling puts or covered calls or whatever. So this is definitely a prudent strategy. Okay, let's have now a commercial and we'll go to our last part. Okay. Yep.
It's interesting. Put this in your calculus bank, Peter. I'm on a flight from Athens to Rome on Alitalia. Okay, but then Alitalia just went bankrupt, and I was going. But at least they're still flying, right? Nope, my flight just got canceled, and I have to reorganize my whole thing on how am I going to get back from Athens back to Florence, and that's a little problem I have with the airline industry.
Well, but hold on. Isn't it true that Alitalia is owned by Lufthansa?
I don't know. I know that your European Union is somehow involved in that. Okay, but I do know this. Here's what I do know. My flight's been canceled now, and I'm stranded in Athens. That I do know, Sasha. So I'm looking for an alternative how to get back to Italy, because my flight back to the United States originates from Florence.
Wait a sec. You're flying from where?
Well, I'm flying from Athens back to Rome.
Athens.
I'm actually going to Paris, then from Paris to Florence, then from Florence to Zurich, from Zurich to Athens.
You
half
will
and
try.
not alone.
You can try an obscure company with the name Baltic Air.
Yeah, I heard
They-
about Baltic Air.
I think
Baltic Air in New York. Forget them.
no, not New York. Yeah, I'm not sure they're flying to New York, but in Europe they're quite efficient. Although I think they have only turboprop planes.
Oh, you're right.
However,
That's not good.
with periodic stops in the Adriatic Sea. You know, see, I like planes that land on land, not
Yeah, big planes are much safer.
that's true, actually. So, you know. But you can stay with Delta. This has no effect on Delta just because they're, other airlines that are supported by their governments go out of business. You know, fine with the airline industry. The airline industry is, that preservation of capital thing.
Right.
Okay.
Yeah.
is it?
You know what? I don't like most airlines, but I do like Delta. Again, they're profitable now.
I'm flying Delta. I have Delta cards.
Yeah.
I do Delta all the
Yeah,
time.
I think they're one of the better airlines. When we
I
fly
agree.
vacation, we go JetBlue or Delta, and it's
I agree.
good quality. I don't like a lot of the other airlines, but I don't like them financially either, obviously.
Right.
But Peter, what do you think about Southwest Airline?
Yeah, it's probably good. I haven't really invested in it. Again, I'm not a big airline investor, but
Yeah.
I have a friend who does technical, and he turned me on to Delta, and he's been very accurate for years. And he says he thinks Delta will get to like 54, 55 in the next month or two, and then maybe go down a little. But I like when I like the techs and the fundamentals, that's a winner. So
that's good enough.
yeah, I like it, and I like it for the long run because somebody else wrote it's a free call on the opening up of everything. If they're making money now, wait till the huge demand for leisure keeps hitting. People paying $1,000 to rent a car, they're going to pay a lot for airline tickets for all the vacations they missed. The huge demand, and also business travel is coming back gradually, but it's coming back. And when it's all back, look, Delta was at 60 or over before the pandemic, and it's going to do more business than ever. So
good arguments, counselor. I mean, what can I tell you?
Yeah, you know what? I have a great. Okay, so this is really interesting. I like TRP for energy. First of all, energy is where I think there will be inflation. And it'll affect the market because I think we're going to see inflation in housing because of low interest rates, and energy because of supply and demand, and also because the energy industry probably hates Biden and the Democrats, and this will help get them out of office, just like tech put their thumb on the scale against Trump. They're going to say, you know what, let's drive energy up. They won't do it as a conspiracy, but they'll just say, okay, I'm not going to invest enough in exploration, and boom, energy will go up. It's just, that's a conspiracy theory, but it's probably true. But anyway, I like energy anyway. But here's a really interesting story. So TRP, first of all, I've always liked it a lot. It has a 5.4% dividend, hard to find, very safe company. It supplies 25% of the natural gas to the United States, Canada, and Mexico. And natural gas is not going anywhere because it's the cheapest fossil fuel without a doubt. It's increased its dividend basically steadily, 5 to 7% or more every year for the last 20 years. It doubled its dividend from 2000 to 2010, again 2010 to 2020, and you can see the projections. It's got an 8% price over cash flow, so it's already generating 8% cash, but it has all these projects. Also, it had the Keystone XL pipeline, and it was still generating cash even while investing in that. So now it's just it has other growth projects, and then I'm going to tell you the kicker in a minute, but it has other growth projects, so it can take that cash and now put it somewhere else, or just generate cash by not spending it because it wasted money on Keystone XL that maybe someday will come back, but maybe not because of politics. So, but here's the kickers now. So, and by the way, I raised it to 5.25% around a little more of my portfolio allocation, because when I get safety in a 5.25%, almost certainly growing yield, it's very hard to find. But here's the interesting thing. In the last week, I read articles about this carbon sequestration, which is the process where you take carbon dioxide, one of the greenhouse gases, and you turn it into a liquid or solid. In this case, I'm guessing a liquid. So TRP combined with Pembina Pipeline, another Canadian company, and they are doing a major carbon sequestration project in Alberta. And that is where the oil sands are, and that's very dirty oil, pollution-wise. But this carbon sequestration could, as I'm reading about it this week, it could revolutionize, first of all, energy, because these fossil fuels with carbon sequestration could be, especially natural gas, by the way, could be much less expensive than solar and not pollute anymore, because the TRP is working on a 20,000 tons per year project now to sequester this carbon. So this is a new thing for pipelines, because now they can get into the business and they can pipe it, and it might be good for the other pipelines, and it's certainly good for natural gas. So it's a huge growth opportunity. What?
Is it new technology what they're using there?
Well, carbon sequestration has been known for a while, but it's not advertised a lot. It's the last thing maybe certain people, Democrats or people who hate fossil fuel, not all Democrats, but I'm just saying fossil fuel haters would want to talk about, because it's a way to take natural gas and basically offset the damage done. And it's still using a fossil fuel. But it's been around a while, but the technology is improving all the time. And now this is a huge project. And as I said, it's just the start. So all these pipeline companies and natural gas companies, the natural gas companies are going to probably have to pay for it. The pipeline companies are going to make money shipping the liquid carbon dioxide. And so for TRP, it's like, I keep wrestling with the fact I'm only 5.25%, but it's, part of the balance in the portfolio. But sometimes I think I'd go 5.5 or more, because I just don't know where else to invest in anything these days, because stocks are so high and dividends are so low.
Nick, what's on your radar and what are you attracted to?
Well, see, what I'm looking at right now, believe it or not, is the biotech stocks. Okay, and the real problem I'm having looking at, I bought Pfizer, and I also bought Exxon into energy, but Pfizer has not outperformed Exxon. Exxon has been, even now beats Walgreens, Boots Alliance, has been my best performer, up 44% this year. I wish I'd bought more Exxon when.
Oh yeah, really? Wow, that's nice.
Yeah, 44.24. So Exxon's doing well.
Energy is one of the places to be.
Yeah, Walgreens Boots Alliance was number 2 at 36%, and Pfizer a dismal 8%. Okay, but here's the reason I'm looking at the biotech, and here's the reason I'm having problems with it. There's a lot of biotech and a lot of ways that people can innovate to cure cancer, cure all these crazy diseases, and we have a aging population in the United States. 10,000 people a day turn age 65, and you get all sorts of diseases out there. One person in my community is actually the CEO of a small biotech firm that has this unique patent that cures a certain cancer, but unfortunately 350 people get that cancer a year. But like he said, what he can do is reposition it to other cancers. Okay. Well, when you look, and he's got a patent on that, when you look at the biotech sector in general, all you need is like one home run. But as I'm scanning through the biotech stocks, not being a SME or subject matter expert in biotech, I read and I go, what am I really looking at here? This could all be fake news. It could be real news. It could be good. It could be bad. In other words, it's a bit of a gamble. It's the intelligent investor, I'm not sure, would look at biotech, but I am, because I do see there's a possibility that is the next tech sector out there. In other words, the next big movement of money and funds and profits into biotech. In terms of energy, to me, Peter, energy is gold. To me, better than gold. So I'm looking at TRP more so than anything else, because I think I love Swiss Impact, but let's get real. Okay, people love to consume energy. As third world countries develop, they're going to consume energy, and it's just the way it is. So the thing is, the energy stocks, and they're very well managed. Once you lay the pipeline down, it's a money machine. It's better than that. It's better than the Wall Street money machine, because you laid the pipeline, you collect your revenue, distribute to your shareholders. I mean, it's a great industry to be in. So I'm always into the energy. The biotech I'm looking at, Sasha, I'm looking for guidance. I'll be talking to some other subject matter experts, because I look at the biotech stocks, I go, how do you know which one's going to be the next Genentech? I don't know. Yeah, it's real tough. The only people that really know the market that I've met don't know what they're doing. Okay, in other words.
I personally like AbbVie, ABBV. That stock is paying good dividends. And I think I'm following them I owned them from time to time. Then I sold options, so it was taken away from me. Now I'm looking at it again, and it seems to me
What do they do, Sasha? What does AB do?
Oh, they
What's the drug
have a
company?
bunch of patents. It's a biotech company
Really? Okay.
with huge patents portfolio, and they never had, except that downturn in the market with COVID in March last year. They never had really substantial downturn. So they were going, let's see, to $90. They would come back to 85, then would climb to 105, going back
So,
to
Sasha,
100.
are you saying you like AbbVie? Are you in AbbVie?
Yes, I do, and I used to own. I used to own the stock, probably two, three times, I would say. And but I was selling covered calls. So I was exercised one time, second time. Now I'm waiting. It may go down to 110, and then I would enter again. That's kind of
What is it? ABB stock?
ABBV.
ABBV.
Now, the other way to play this to get a diversified fund, because then you have more chance of hitting that home run. I was in GRX. I just got out of that this week too, because again, I think the downside risk in the market is much higher going into the summer.
Yes.
Now, I think we could easily see 10, 20%. And, GRX paid a 4% dividend, but it's still very dependent on appreciation to pay that dividend over the years. And right now, I don't want to take extra risk. I mean, because I don't see much upside in the market. It's not looking healthy to me. And that financials going down in the last month tells me it could be leading. So we could see a correction because everything's so valued so high. Like Nick says, you don't want to buy at the top, and he doesn't like buying at the top. Well, it feels to me like a lot of the stocks are at the top now. So
yes, I agree with that. That's again, I'm initiating only options position and new stocks. No, I'm not buying new stocks at all.
Now I'm having trouble finding some. I was thrilled when I got the TRP because it was like, okay, at least I can deploy some of my cash sitting around in the bank account, getting 0.4%, in something that I think is solid.
Well, remember the old adage, sell in May and walk away? Well, the thing is, we're past May, and we haven't sold, we haven't walked away yet. But part of the reason I don't is I'm waiting for Uncle Joe to spend his trillions of dollars. And every time I wanted to walk away, the government comes bolstering in with a bunch of cash and floods the market. So how can you walk away, from the market? But increasing positions may be difficult because you may have better buys in October. Really difficult to predict. But I will look at ABBVIE. I'll look into that and get some opinions on that.
So 114.
114, at $114 a share.
I will say about
I guess they don't pay any dividends, do they? No dividends?
No, they do. Yes, they do.
What's the dividend?
I would say probably 5% or so, but
that's a pretty good dividend.
I will say about that sell in May, first of all, it is true the market performs much better in the first part up to May than the second part, but it was not a good strategy over time to sell in May. It outperformed, in other words, if it outperformed the second part, but a lot of times it still goes up. It's just that, but this year I don't like it. Because again, the risk. I don't think the market can go much higher, and it could go much lower now. The risk.
It's always good to listen to analysts and then take it with a grain of salt because, like I said, I've lost so much money by listening to these guys. But they said that the market should only perform 6% between now and the end of the year, and they might be right.
Well, but if your dividend stock is paying you 7 or 8%, so then you should be okay with dividend stock. So for myself, I decided just to keep all dividends, high-paying dividend stocks, and the rest is getting out of, except maybe Barrick Gold. I will still hold on to it simply because all these cash payments coming in, and who knows? Gold indeed is kind of it's uncharted territory. It's around 1,800, slightly lower. It may go down to 1,500, or it may go to up to 22,000, maybe.
Well, the only one I'm getting really stuck in the eye with is FireEye. My FireEye.
It's back down again.
Well, I'm down from its last thing. It hasn't fully recovered yet, but I'm going to hold because I honestly think you're going to see more cyber attacks.
Well, actually,
No, yeah.
I sold bunch of covered calls on FireEye, waiting for them to expire worthless, and sell some other. Indeed, the stock could move, but nobody knows when, and I'm not prepared to sit for 2 years waiting until it will move. However, by selling covered calls, I think I will I will cure this position somewhat. Okay, that brings us to the end of our today's program. Good luck to everybody for next week investing, and we'll see you all next Wednesday. Thank you so much, and have a great week. It's IBM Pod TV financial show with Sasha Star. Thank you very much. Bye-bye.
Bye.